Something just happened in the world of digital dollars that a lot of people are going to gloss over, and that would be a mistake. Circle, the company behind USDC, one of the largest stablecoins on the planet, just received final approval from a United States banking regulator to operate as a federally regulated national trust bank. If that sentence sounds like a mouthful, do not worry. By the end of this video, you are going to understand exactly what this means, why it matters, what it does not mean, and where all of this is heading next. So let us break it down together. First, the headline itself. On July 10th, 2026, Circle announced that it received approval from the Office of the Comptroller of the Currency, an agency most people refer to simply as the OCC, to establish a national trust bank. The new entity is officially named First National Digital Currency Bank, and it will operate under the name Circle National Trust. This places a core piece of Circle's operation under direct federal oversight for the first time. Now, before we go further, let us make sure we are all on the same page about who Circle even is. Circle is the company that issues USDC, a stablecoin designed to always be worth one United States dollar. A stablecoin is a type of digital asset that is pegged to a stable value, in this case, the dollar, and it is backed by real reserves like cash and short-term government securities. USDC is currently the largest regulated stablecoin in the world, with roughly $73 billion in circulation. Now, if you count every stablecoin out there, USDC actually sits in second place behind Tether's USDT, which has around $184 billion in circulation. But notice the keyword there, regulated. That distinction is exactly what today's news is all about, so hold on to it. Either way, we are talking about a serious piece of financial infrastructure, not some small experiment. Here is the part that trips a lot of people up, so let us slow down and get it right. A national trust bank is not the same thing as your everyday commercial bank. When you think of a normal bank, you think of a place that takes your deposits, holds your checking account, and lends money out for mortgages and car loans. A national trust bank does not do that. It does not accept consumer deposits in the traditional sense, and it does not make loans. Instead, it specializes in custody and fiduciary services. In plain English, that means safeguarding assets on behalf of clients under strict legal standards. It is also worth noting that this kind of bank operates without federal deposit insurance and under a somewhat lighter supervisory framework than a full commercial bank. So this is a specialized charter focused on holding and protecting assets, not on everyday banking. So what does this approval actually let Circle do? At launch, Circle National Trust will provide what is called fiduciary digital asset custody. That means it will securely hold digital assets for Circle and its affiliated companies. Down the road, depending on demand, the bank may extend those custody services to a limited number of institutional customers, things like other banks and regulated financial firms. But the piece that a lot of analysts are most focused on is what comes later. The charter is designed to eventually allow Circle to manage the reserves that back USDC directly under federal supervision. Think about what that means. The very pool of assets that keeps USDC worth $1 could someday sit under the same regulatory umbrella as a national bank. That is a major step up in transparency and trust for anyone holding or building on top of USDC. And to be clear, Circle has said reserve management is a future capability, not something switched on the moment the doors open. Now let us zoom out, because this did not happen in a vacuum. This approval is deeply tied to a piece of legislation called the Genius Act, which became United States law and set out a framework for how stablecoins should be regulated. Circle originally filed its application back on June 30th, 2025, received a conditional approval in December of that year, and has now converted that into full and final approval. So this has been a deliberate, roughly year-long journey through the regulatory system, and it lines up directly with the government's new rules for digital dollars. And Circle is not alone here. This is part of a much broader wave of crypto companies seeking to come inside the traditional banking perimeter. Back in December of 2025, the OCC granted conditional approvals to a whole group of crypto-focused firms, including Ripple, BitGo, Paxos, and Fidelity Digital Assets. Coinbase secured its own national trust charter in early 2026. Anchorage Digital was actually the pioneer here, having received a national trust charter years earlier. So what we are watching is an entire industry trying to trade the reputation of the Wild West for the credibility of federal oversight. And the market noticed. Circle's stock, which trades under the ticker CRCL, jumped by double digits in pre-market trading on the news. But here is where good financial education means telling you the whole story, not just the cheerful part. This wave of approvals is not without controversy. Senator Elizabeth Warren has publicly pushed back, arguing that some of the companies receiving these national trust charters may not actually qualify under the existing National Bank Act. She raised these concerns directly with the head of the OCC. On top of that, some traditional banking industry groups have floated the idea of legal action, arguing that crypto firms are slipping into the banking system through a lighter touch route than everyone else had to take. So this final approval, while a genuine milestone, does not close the book on the legal and political debate. If those challenges gain real traction through legislation or the courts, it could raise questions for this entire group of newly chartered firms. That is worth keeping on your radar. So what happens next? A few things to watch. First, Circle National Trust is actually opening its doors and beginning custody operations. Second, and this is the big one, any move toward bringing USDC's reserves under federal oversight would meaningfully strengthen the foundation beneath the stablecoin. Third, keep an eye on how the legal challenges play out, since they could shape the rules for every crypto firm chasing a similar charter. And fourth, watch whether major institutions, the banks and asset managers of the world actually start building on top of this newly regulated infrastructure the way Circle is betting they will. Let us tie it all together. What we are really witnessing is the slow, deliberate merging of blockchain technology and the traditional United States financial system. A digital dollar that lives on public blockchains is now backed by a company with a federally regulated trust bank at its core. Whether you are a skeptic or a believer, that is a structural shift in how money and technology fit together, and it is exactly the kind of story that separates the people who understand where finance is heading from the people who are still catching up. Quick and important reminder, everything in this video is for educational purposes only. It is not financial advice, and it is not a recommendation to buy or sell anything. Always do your own research and consider speaking with a licensed financial professional before making any decisions. If you found this breakdown helpful, do me a favor and hit that like button. It genuinely helps the channel grow. Subscribe to Pisano Finance so you never miss the stories that actually move the world of digital assets and finance. And drop a comment below. Do you think bringing stablecoins under federal banking oversight is a good thing? Or does it hand too much control to regulators? I read every comment, and I would love to hear where you stand. Thanks for watching, and I will see you in the next one.